guys, so here is example number 1. As you can see, we are bullish, right? So you can see market structure is bullish. So right here what we have is A, B, C, right? So let me mark this out like that. We have A, B, C, and now we are on our way to create the D leg. So this is the A high, and now this is the low of the B leg. So we wait for price to take out the low right here. And what you're gonna notice is if I draw out the fib, you can see price came back into the 0.79 level. So now what we can do now is look for market structure shift, and you can see that price also took out this low. So this could be a great sign. Okay, so let's drop down to 15-minute time frame and look for market structure shift. And there we have our market structure shift. So let's mark out our auto block, which is the last or first candle of the fair value gap, or it could be a continuous bearish candles before market structure shift. But I like to use this method because that is a refined auto block. So my entry would be here, and I would target probably this high right here. So let's see how this plays out. We get our entry during the kill zone hours. So this entry was at 8, right? So that is a plus point. So let's see if we hit our take profit level. Okay, keeps on going, and eventually it hits a take profit level for 8.41. But I would take 1 to 2 and I would go back home and enjoy my life. So let me repeat this again, right? So you see we have A, B, C. Price takes out this low, right? Now if price takes out this low, right, and that is okay. We are only focusing on this low. But however, if this low is taken out as well, then you don't have to worry because the ABCD pattern is complete now. Okay, so you then look for market structure shift as I showed, and yeah guys, that's pretty much it. You look for market structure shift, you target these levels. You don't necessarily have to target the highs. You can take partials along the way, and you should. Okay, but yeah, you see price. The reasoning behind this is, let me give you the reasoning behind this. So when the market structure is bullish, right, when price wants to go higher, what it's gonna do is gonna form a range. So this is range, right? So price is going to take out liquidity from the take out the buy side liquidity first, and then it's going to take out the sell side liquidity, and then it's going to move to its original destination. Okay, so when you are bullish, you look for something like this. Okay, you have a purge on the buy side, and then you have a purge on the sell side. So now once price has taken liquidity from both sides of the market, then price is going to move in its original destination. Okay, so let me give you guys another example.